Wow, are you seeing what the markets are doing? What the Trump tariffs are doing to the markets? You've come to the right place because it is all directed. The tariffs are meant to hit China and all the Asian countries surrounding China. And that's what's causing the crash in the stock market, right, for the last couple of days. And that in turn is affecting crypto, Ethereum, Bitcoin, all of that. So it all starts with the Trump tariffs, right? All of this for the last 2 months, it's been playing out. Bitcoin was simply front running the trouble it's seeing that's going to come out of the stock market. And who's the best person to listen to analyze on how China and everybody else, France, UK, European Union, how everybody's going to hit back to US with the tariffs? Don't think this is over because they're going to hit back. I've been saying that on April the 2nd, right, the so-called Liberation Day, a lot of people think this is going to be sell on rumor and buy on news. It's going to bottom. I said, there's probably a very small chance that's going to happen. What I think is going to happen is that these countries are going to hit back. And that's what we're seeing right now. When they hit back, you've got a tennis match, right? What Trump did just now with the announcement yesterday, with the announcement of all those huge tariffs on these countries, that was the serve in tennis. He just served the ball, right? Now, you've got China, European Union, you've got all these countries in the court trying to hit it back now. These countries are serving the ball, are hitting the ball back. Now the game is ongoing. Do I think, as I've been saying, I do think the market's going to figure out sooner or later where this is always going to head it. And it's probably going to discount the future before most people figure it out. So there's a chance to get in somewhere down the track. In the next few weeks, I think we could see the market's bottom. I'll show you guys the reason why. But before we get to all of that, first let's quickly answer the question of which crypto exchange does Pablo He-Man use? Well, Pablo uses this crypto exchange that is basically non-KYC. And that means you don't have to show your ID. That means anyone can join, Americans can use it, and the exchange can't see you, the IRS can't see you, the tax office can't see you, the FBI, CIA, nobody can see you. That's why I like them. I made this deal with them for my followers to win a BMW bike, a tour to Dubai, Rolex watch, just simply by trading, right? Joining and trading. Now, end date. The offer ends on April the 6th. If you're watching this on YouTube, then the link is in the description below. The link is in the description below. But if you're watching it on some other platform, such as this one, then just click on my profile page and then click on the Stand link. The first thing that pops up on the Stand link is the Bitunix deal, but only on the Pablo He-Man link, right? Only on the Pablo He-Man deal. Okay, limited time only. Let's get back to the markets. So basically, first we need to understand why is Pablo saying that this is going to be an ongoing retaliation. First of all, let's just have a quick look at the markets. Look at this. This is about as big of a crash as I can remember for the last 2 or 3 years now. The SP 500 is down for like 4%. The NASDAQ is down like 5%. So the reason why, coming into all of this, I was probably like the only person calling for the other countries to hit back. That's because most people work on Wall Street, can't even place China on a map, or can't even place, probably never even traveled to Japan. Now, the reason why the markets are reacting so big to the tariffs is because, like Pablo said, in my past videos, I've been warning about this, and I'm on every platform that I've been on saying that basically the last time US had tariffs this high, this was just yesterday when Trump announced and spiked up to, like, on average, the effective tariff rate is about 29% now. The last time was this high was like 1920s. This is 1929 actually. And last time this happened, it caused the Great Depression. It caused the Great Depression. Now, I'm not saying it's going to happen because of Trump. And I'm not going to say this is the case because people are so sensitive. It's so political now. But I am going to say that I'll show you some facts and you can then make up your mind. But the last time tariffs were this high, it coincided, that's a better word, coincided with the Great Depression. First of all, will the countries back off? Let's see. So my opinion was that the countries were never going to back off. And I said that, before we had all this tariff business. I was calling for this ABC pattern to play out on all these charts. So basically, the most important one, the SPDR or the SP 500 ETF, which is A, B, C, right? I was expecting the C leg down to get to probably something like 524, but it could be a double bottom, right? If we had really good news from Trump. If Trump could like actually deliver light tariffs, we'd probably get like a dip here and a bounce, but it's now looking like ABC is playing out, and we're heading to 524 for support. But you know, this administration is crazy enough; they could change their mind at any time. The NASDAQ as well, for example, ABC, A, B, C, and it's already coming to my support, which is around 16.3K area. That was the support I pegged. And if we look at Bitcoin and Ethereum, for example, Bitcoin holding steady for now, right? With I think a good chance of getting into like low 70s, something like 73K. So if it does that, Ethereum does A, B, C, right? This C leg right now is doing a double bottom. That's because Bitcoin hasn't moved down yet. But if Bitcoin goes down, then Ethereum would also go down to something like this. Boom, 1530s, 1520s. That would be the target. So why was I saying that? I mean, you can find this all over my tweets, or or in my videos. Why was I giving these low projections coming in, saying they're going to play out this ABC pattern? The reason is because I said these countries are going to retaliate, right? Well, why would these countries retaliate? Because US doesn't give them a choice. People are like, are they crazy? Why doesn't China just back off? I'll show you why China doesn't back off. Because the US, right? You've all seen that chart. Basically, the US does asks everyone to saying the US would do half the rate half the tariff rate that everybody else is doing. So, for example, China does 67%. So US then China does 67% tariffs on us, on the US. So then we're going to do 34% on China. Europe does 39% on US. So then we're going to do 20% on Europe. Vietnam does 90% on United States. So then United States will do 45% tariffs on Vietnam. Now, as I said in my Discord yesterday, this is actually just not true. Okay, so this is what Trump and his team claims. In this column, the left column is what everyone puts on them, 67%. Then they retaliate 34%, right? Vietnam hits US with 90%, and then they hit back Vietnam with 46%, right? Roughly half. Indonesia hits, US with 64%, so US hits back with 32%. And from that, you would say, well, it's unfair. Why do these countries hit the US with such high tariffs? And basically, so then US must hit back. Now, I'm here to tell you that that's actually not true at all, because these are just actually made up numbers, and I'll show you how they made up these numbers. There's no way for these countries to actually lower tariffs. Most of the countries that trade with the US actually don't have, except a few African countries, actually don't have high tariffs on the US. For example, like China, Japan, and Korea, other than like one or two small industries, overall they have no, such as automobiles, they have no tariffs on the US. For example, Mexico and Canada have a free trade agreement, FTA, they call it the North American Free Trade Agreement with the US, right? Those numbers are totally made up. I'll show you guys how they make it up. So when it says something like China or Japan is doing 50, 40%, 60% tariffs on the US, and you need to lower it, right, to by 30% or zero, they have no idea what the f you're talking about, because those numbers made up. I'll show you how they made it up. Here, these countries feel stuck. Where does this 67% I just showed you guys, in Europe 39%, where do these numbers come from? It's very simple. All they have done is basically, this is the trade deficit with China. There's a negative, right? 295 billion. And this is the US, how much US exports to China, 143 billion. And how much US imports from China, 438 billion. All they do is this number minus this number, you get to this number, which is the trade deficit. All they have done is they've taken everything for all the countries from column B, and divided by column D, and they get this number. You take 295 billion divided by 438 billion, you get 67% tariffs. Does that make sense, folks? And then for Europe, for example, you get 235 billion, right, trade deficit divided by 605 billion US imports, right? You get 39%. So basically, all they're doing for all these countries, Vietnam, for example, right? US imports 136 billion from Vietnam. The trade, but only exports 13 billion to Vietnam. So the trade deficit is 123 billion dollars. They divide that trade deficit by the US imports number, and you get 90%. That's all it is. That's not the tariff number. That's not the tariff number. That's not how you calculate the tariff number, right? The tariff number could actually be something quite low. It could be a case where, for example, hypothetically, US just has nothing that the Vietnamese want or can afford. So they only import very little from Vietnam. But Vietnam can produce tons of cheap stuff for Nike shoes, for, I don't know, like Levi jeans, whatever. So they export a lot to the USA. And the tariff rate on American goods is nowhere near 90% if there is any at all in Vietnam. So therefore, these people in Vietnam, in China, in European Union, in Japan, in Mexico, Korea, these are the largest trading partners to the United States. The rest of the world, in fact, are scratching their heads and saying, where do these numbers come from? Because they don't have that tariff number, that rate applying to US goods, so they can't lower it. They can't lower what they don't have. So then they're stuck. No, they can't lower their tariffs because there are no tariffs to begin with. Because they're stuck, so all they can do in reply is, well, we'll hit back to the US then, because it's giving them no option. It's a little bit like saying, let's say you have Patrick Mahomes, right, the NFL quarterback, and you have Tom Brady. Tom Brady accuses Patrick Mahomes of taking steroids. He says he's outperforming because he's taking steroids. And then they look into Patrick Mahomes, test his urine, and the sample comes back, says he's clean. He's not taking any steroids, right? He's clean. And he says, no, I'm not playing him. He needs to be banned and disqualified, right? Tom Brady says, unless Patrick Mahomes stops taking steroids. And Patrick Mahomes like, I'm not taking any steroids. I just work harder, work more efficiently, and that's why what I produce is cheaper, and that's why Vietnamese, European, Japanese, and Chinese goods sell more in the U.S. You could say there's maybe currency manipulation. They keep that currency low, whatever. Then how do you measure that? No, what's Vietnam going to do? Is Vietnam now going to have to appreciate the Vietnam dong, like 50%? Is China going to have to appreciate the Chinese yuan by 50% so that then their goods are no longer cheap to export to the US? That's pushing all these countries into an impossible choice, so they're not going to back off. My understanding is they're sending trade delegates now to talk with the US. US is going to ask for this, for that. I mean, there are no trade barriers for like 70% of these countries. These numbers are made up. I just showed you guys. They're made up by just dividing any number from this column into number from this column, and they get this number, right? And then they divide that by half, and they get this number. It makes totally no sense. Like, guys in my Discord will know that I actually have a math degree. I topped my math degree and got a scholarship from one of the major investment banks. You don't need to be a math genius like Pablo to understand that. That's not how you calculate tariff rates. It actually doesn't make any sense. They've just pulled this number out of thin air to emphasize. The only reason why this number is used is because it emphasizes how much trade deficits US has with this particular nation. US has a lot of trade deficits with this nation, and therefore we're going to tariff them. And you might think, yeah, screw them, screw China, Vietnam, European Union. it makes perfect sense. No, it actually doesn't. I'll show you why. Sometimes you have a trade tariff. You have a deficit with a trading partner, with a country, because that's just how God planned out planet Earth. You just happen to need something from them. I'll give you a perfect example. If you live in United States, if you live in say Europe or UK, Canada, or China, you probably import a lot of oil. You all these countries I just named, you all have a massive trade deficit with Saudi Arabia. Why? Because you all need to import oil from Saudi Arabia. But does Saudi Arabia have high tariffs on any of your exports? No. Saudi Arabia has zero tariffs. It puts up zero trade barriers against United States, China, UK, EU. But everyone has a massive trade deficit against the Saudi Arabia because everyone needs oil. So what do you do now? Then do you go ahead and say, oh well, they're shafting us, they're screwing us, so we now put up huge trade tariffs on them. So that's put up say 50% trade tariffs on Saudi Arabia. Then what happens? Then oil prices go up 50%, right? Something like that, or 40% at least, right? Is that the outcome that you would want? For example, I'll give you another example. For example, China imports a lot of iron ore from Australia because China produces a lot of cars, produces a lot of steel, aluminum, and produces, builds a lot of buildings in China, in Africa, in One Belt, One Road project all around the world. It doesn't have that much aluminum and iron ore. So China imports a lot of that from Australia. So China has a massive trade surplus with USA, but China has a massive trade deficit with Australia. Does that mean Australia has a huge high tariff rate against Chinese goods? No. Australia is one of the few, probably the only OECD nation that I know that has zero tariff rates on Chinese EVs, for example, and has like almost zero tariffs on as much Chinese imports as I can think of. So China would never accuse Australia of having high tariff rates, in fact, against them. In fact, Australia has almost none from what I know. But if there was Trump in charge, he would say, oh, he'll use the trade deficit, right, which is huge because China imports a lot of iron ores from Australia, and he'll say, oh, look, our trade tariff, I can't find Australia on this page, but if we scroll down, we can probably find our trade deficit is huge against this country, so therefore we divided by our total imports, and boom, you're going to get a huge number, and you're going to say, oh, Australia puts like 70% tariffs on us, and therefore we need to tariff them back at 35%. Now, imagine if you're Australia or Saudi Arabia, you're like, I have zero tariffs. I have zero tariffs on you guys. I just export a lot because you all need my oil, and you need my iron ore, and you need my aluminum. You don't have that. I have plenty of it. That's just how the way this green earth was formed by God, by the Almighty. That's just how the cookie crumbles, right? My next door neighbor is Yemen, right next door to Saudi Arabia. They have zero oil. They're Arabs, they're Muslims, but that's just how the cookie crumbles. They just have zero oil. I'm next door to Yemen, and I have all the oil in the world. Are you going to punish me for that and say that I have 35%, 70% tariffs against you? So anyways, this doesn't really make sense. What I'm just trying to say to you guys is that a lot of these countries are stuck. There's nothing they can do, and they're going to hit back. So when they hit back, like China, Europe, Japan, Korea, Canada, a lot of these are like major. That would cover about, and Vietnam. Once we add that up, that would cover like something like 80%, 90% of trade with the United States. So let's quickly go through what's the fallout from all this. The fallout is basically U.S. industrial production is tipped to go negative something like negative 1.1, negative 1%, because of because U.S. imports a lot of steel and aluminum from China. So if you basically tell the U.S. factories, well, it costs you like $100 to import like this much steel from China. Now you got to pay $100 $54. The tariffs they put on China in the last 2 months, all added up, compounded, is 54%. Rather than pay $100, now you need to pay $154. So imagine General Motors, imagine Ford. If they're still making cars in the United States, they're like, okay, our basic cost of steel, aluminum, now goes up 54%, $154. And that's not the only problem. The other problem is that when consumers are buying, inflation also goes up. When inflation goes up, prices go up, then consumers buy less. They buy less cars, they buy less jeans, they buy less Nike shoes, they buy less, Apple phones, because these are all imported from some Asian country, like if not China, then Samsung phones are from Korea, then some the Nike shoes are made now in Vietnam and Indonesia. A lot of clothes like Levi jeans are made in Bangladesh. So they did a projection, and this shows the inflationary impact. And the inflationary impact in the US is expected to be 5.5% change in the coming month. So, or in the longer term. So in the next, 12 to 18, 24 months. So just think about that. I mean, what that essentially means is that right now US is on like 2.5% inflation. So this could take inflation to what, 8%, right? Even by conservative estimates, it could go to something like easily go to 3.5%. 3.5% is not acceptable to the Federal Reserve, and they're basically just gonna fight back on that. Now let's have a look at what the countries are doing in response, and we can see that basically EU, China, Japan, Germany, South Korea, these are all the big trading partners of US, are all preparing retaliatory measures, which means they're going to hit back. Now, just quickly, what are I'm not totally doom and gloom. I think we do the ABC pattern. Okay, let's put it on a chart. I think we do the ABC pattern, and then we bounce back. Where is Bitcoin? So here is Bitcoin. So, for example, Bitcoin holding surprisingly well today. A, B, C. I think eventually we get something like a pop down to 73K, and we bottom and then go up. And look at this. Just by the way, look how well this blue line has worked, right? I trailed this blue line. I was showing you guys this chart for like 2 or 3 weeks, and look at this bounce up. Hits that blue line, 89K from memory. It was like 88.7K from memory. Hit that exactly and pop turned down, right? So I think we're gonna get an A, B, C leg down, A, B, C leg down to hit 73, and then we look for the test bounce up on this blue line. Once this blue line breaks, retest confirm, then I think the next leg up starts. Why am I still being bullish? Because of 2 things. So first of all, I want to say that if you hold stocks, I've said this many times in my Discord, and I've said this in my videos as well. I think a recession is going to happen sometime this year. We're very close to it. I didn't know Trump was going to be the final feather that breaks the camel's back, but I've been warning about this for a few months now. I said Nvidia and these AI stocks of the United States are overvalued and basically needs to go down a fair bit, because DeepSeek's proven that narrative is fake. So I've told all the family men. I said all the family men, all the guys with the 401k, with the superannuation, with your retirement accounts, start dollar cost averaging out, because Warren Buffett is holding a lot of cash. So that's worked out to be exactly correct. We've kind of timed the top in a Magnificent 7 crash. It's down 25% now. But however, for the crypto guys, I've said many times, for the crypto guys, the bulk of my wealth is in property, and then a lot of it is in stocks. For crypto, it's only my 3rd largest position. So I take a lot more risks with it. I'm not going all in with it. I take a lot more risk, and I think we could still have a massive bounce left. The reason why is because this. I'll show you guys. So we have this is Chicago Mercantile Exchange. the chance of a rate cut in May is now coming up to 26%. And you're like, oh, that's not a lot. But it was only 10% yesterday, right? And yesterday they said it was 90% chance of the Fed not cutting, now down to 73%. And over the coming days, we could see that number go even more in favor of a rate cut. And look at June. For June, we're now seeing 80% chance of a rate cut, but also like 2 rate cuts has gone from 6.7% chance to 14% chance, right? 1 rate cut has gone from 60% chance to now 64% chance. So all up, at least 1 rate cut, if not even 2 rate cuts. And I think the Fed is reacting way too slow on this, reacting way too slow on all of this. But the other big news is this. The big whale in the room, the big elephant in the room is that China has yet to put in their big physical bazooka package. Last year, I remember everyone was screaming for the Chinese government, CPC, to putting a massive, liquidity printing, yuan printing, liquidity flood into the market. They refused to do that. I think they were just waiting for a moment like this, where something like they've just got hit with 54% tariffs in 2 months. And so now they can't export as much to the US. Now they're gonna need their own home audience, their internal domestic economy, domestic consumers to pick up that slack, to start spending and consuming. So the way they're gonna do that is they're gonna flood their market with lots of liquidity. And a lot of that money will work its way into Bitcoin and crypto. If you understand anything about the history of crypto, you understand that it's basically Chinese billionaires trying to get their money out of China. So that's just the way it works. It's basically when China floods their economy with money, a lot of that would end up getting into crypto. So for those 2 reasons, I'm not prepared to say it's a bear market in crypto just yet. For Bitcoin, the chart still looks, okay with, higher highs and higher lows. And stocks, what I've been telling everybody is we're doing an A, B, C pattern down. We bottom. I've given the levels out already to you guys already a number of times, and we bounce from there. So because in the next 2 to 4 weeks, I think the market will slowly figure out what each country is going to do to hit back against the United States, and what the United States is going to do to hit back against them, or maybe US will just cap those tariff rates at those levels and never move again. And then basically the market, once the market knows what's going to happen, then it's going to bottom and try to make a big bounce. So what I'm expecting for crypto and stocks is a big bounce, and I wouldn't rule out the probability that can even take out the old all-time high, because it depends on if the Fed cuts rates in May. It depends on if the Fed ends quantitative tightening. Right now, they are worried about inflation. Of course, they're right to be worried about inflation. But what we could see 2 months from now is both China and the United States and Europe spending big to prop up their own internal economy. So that's a lot of printing from all 3 major governments. That could happen. Right now, we don't know that for sure. But as I said, this is not my largest portfolio, right? For the family man, I'm glad that I made the right call at the exact right time for stocks to top, especially the Magnificent 7 stocks. But for crypto, it's a smaller portfolio for me. I've said that many times. I'm taking much more degen risks with it. So I would like to bet on a bottom coming up in the next 2 to 4 weeks, and then major bounce, even possibly a new all-time high from there for stocks and crypto. But anyways, I'll keep you guys updated anyway. So for all the Aussies out there, check out SwiftX. The Pablo link is in the description below for SwiftX and Bitunix. For everyone else, thank you for your time. I'll catch you guys